When a company like Domino's Pizza sounds an alarm about the US economy, I listen and I want you to know what's going on as well. I think it's important. So let's jump in. We're going to start with thestreet.com. The title is Domino's Pizza Sounds Alarm on Concerning Customer Behavior. And before we dig into the article, I want to thank this video sponsor, its Chapter. They provide free Medicare advice for people trying to navigate the complexity of the Medicare system. Thank you, Chapter. More on them later. Okay, let's jump into this article by The Street. And it starts off saying Domino's Pizza, which has over 6,000 locations in the U.S., is sounding alarm bells on a startling change in customer behavior. During an earnings call on February 24th, Domino's Pizza CEO revealed that the company has noticed more of its low-income consumers in the United States are avoiding delivery. Now, Domino's tends to be one of the better value offerings out there. Pizza tends to be one of the better value offerings there. So when consumers can no longer afford pizza, then we know, we've squeezed the last juice out of the consumer. We've had, frankly, we've had enough, right? Let's keep going with this. The executive from Domino's, the CEO, says that delivery is a tougher value right now in this value conscious world. And so the choice isn't going to be another restaurant. Most of the time, the choice is we're going to eat at home. In full disclosure, yesterday, I was eating at home, and I wanted pizza, but you know what I had done? I had ordered in a previous grocery order some eat at home, some bake at home pizza crust, and I made my own pizza at home. So I think there's a lot of truth to this. And in fact, a lot of consumers are reporting that they are now buying ready-to-eat food from the grocery store as opposed from restaurants. Let's keep going. I'll share more thoughts on how we're all kind of trading down the value chain as prices continue to rise. Okay, the article goes on to say, according to a recent survey from LendingTree, almost 80%, 78% of consumers view fast food as a luxury since it's gradually become more expensive. I don't know about you, but 5 years ago, I did not consider fast food to be a luxury, but I feel a little bit of that way. The article goes on to say also 43% of Americans who were asked to tip on fast food refused to do so, while 62% that they're eating less fast food due to rising prices. And the CEO of Domino's goes on to say that and acknowledge that delivery is not cheap, but claim that Domino's delivery fee is very competitive. Okay, there's another article that talks about Domino's profits and what they're seeing. But before we go there, I do want to tell you more about this video's sponsor, its Chapter. They are a Medicare advisor. I've met with the team at Chapter. They help people navigate the complexity of Medicare. They help people navigate their various choices and pick the choice that's best for them. And one of the challenges with Medicare decisions is just getting good data on which of your prescriptions are going to be covered, which doctors are going to be covered, what of your health situation is going to be covered. Fidelity Investments, one of the world's largest custodians, says even with Medicare after the age of 65, most of us need to budget over $150,000 for the rest of our lives for the costs of Medicare and also costs that are not covered by Medicare. So getting somebody by your side, getting somebody that has access to the right data, getting an advisor that is putting your interests in front of the insurance companies is critically important. And that's why I'm proud to sponsor with Chapter. You can reach Chapter by calling the phone number up here, or the link and the QR code shown here are also in the description. Thank you, Chapter, for partnering with me on this video and sponsoring it. Okay, let's go into this next article. It's called, it's from Investopedia, and it says Domino's Pizza among the biggest S&P decliners as U.S. sales growth disappoints. So let's see what's happening to their sales growth. The article starts off saying shares of Domino Pizza fell Monday morning after the pizza giant reported a mixed fourth quarter report, with better profits, but lower sales than analysts expected. Now, this is really important. Stay with me because Domino's has had a history. I'll share with you what their history is, but they have an incredible history of sales growth. But first, their same store sales rose by just 0.4%. So it was almost flat among its US locations, and that was below consensus. The analysts thought that they'd grow at 1.5%. But here's why it's a big deal. The CEO, Russell Weiner, said that the 2024 year marked 31 straight years of international same-store sales growth despite challenging global macroeconomic events. So Domino's has a history of their sales growing. And as inflation is taking off, as the consumer, as you and I are getting squeezed more and more, we could be looking at, I don't know, but we could be looking at one of the first years that in a long, long time that Domino's has not seen their sales continue to go up. And their stock was down 60% shortly after the markets opened, making it one of the biggest decliners in the S&P 500 on that day. And they had entered the day up about 7% over the past 12 months. So it basically gave up a year's worth of gains that it had achieved over the previous 12 months. So what does this mean? I don't talk about companies from a stock standpoint, from a, you should or you should not buy this stock. I don't offer that kind of thoughts on my channel. In fact, none of this is financial advice. I don't know your situation, but the important thing is, when we can't afford 2 medium pizzas from Domino's, which I grew up in a solid blue class family, and getting pizza delivery, it wasn't every Friday, but it wasn't unusual for us to get pizza delivery. In fact, this is Lent season. My family did not do it during Lent. For some reason, it was okay to eat fish during Lent. So we'd go to McDonald's for, I forget the name of the fish sandwiches, but when the average American is saying, you know what, I need to tighten the purse strings. We need to look at the budget, and we can't afford, we're not going to spend money to get a pizza delivered to our house. That to me is a sign that there's not much more room in the Federal Reserve to squeeze the consumer. And the Federal Reserve would agree with those thoughts. The median household income was about $78,000 before COVID, and unfortunately that's dropped to $74,000. So we've been squeezed there. Prices have continued to rise, and there's just no longer a lot of wiggle room for most of us. So what should we do? I think we do the best that we can. We do like I did last night, right? I mean, I had a pizza crust from the grocery store. It's super easy to make pizza once you have the crust. So I had a taste for pizza. I'm vegan, so mine was cheese-free. But I enjoyed a pizza at home as opposed to having pizza delivered to the house. If you enjoyed this video, the YouTube algorithm says this is the next video of mine that you should watch. Let's see if they're right. And thanks for watching this one. And thank you, Chapter, again for sponsoring this show. Bye-bye.